Welcome to the daily update where I'll go over the action in the market for Tuesday, October 28th, and we'll see how things look for Wednesday, October 29th. Well, we set another new all-time high with the S&P and other main indexes. The only one that didn't were the Russell 2000 small caps, and they were down a little bit, and we're seeing a little bit of weakness inside of the S&P, enough to where the McClellan Oscillator has actually turned negative. So it was really about NVIDIA on Tuesday. There was some news that came out that was really positive to them. That really helped a lot of the mega caps and tech to do better. But the rest of the S&P is just kind of languishing a little bit right now. So right at the open, we did have a higher open at R2, 68.99, right at that 6,900 level. Then we declined down below R1 at 68.87, but we did find support at that built-in level right when you hit the unchanged level there. And prices climbed back above R1, got above R2, but then we did see some late day selling going into the close. We ended up closing above R1. We were up 0.23% on above average volume, and that's been fairly healthy there. We're positive on all three time frames, short, intermediate, and long term, when you use moving averages. And we're under 4% with the 10-year yield, but in Wednesday's session, it's going to be about the short-term rates with the Fed coming out, and they're going to cut rates 0.25%. That's not a surprise. It's what are they going to say, both in their statement and then in the press conference after that, and if the market will like it, not like it, or pretty much be indifferent to it. Some comments. As I said, the Dow, the NASDAQ, NASDAQ 100, and S&P did set all-time highs. Now, on a short-term positive conviction basis, we're still looking pretty good here. The StochRSI, Williams percent R, CCI chart, Stochastics, those are on the list when we see positive short-term momentum. What's a little bit of a concern is that we're kind of far away from the 20-period moving average, and the RSI short-term, based on 9 periods, is also looking extreme. Intermediate term, we have the CMB composite. The standard deviations chart, we're up in the +3 channel still. We've been up there for a couple of days now. The Sean trend meter and the percent B, we're still above that upper Bollinger band. And we're also far away from the 50-period moving average as measured by the boom indicator. No change to the overall scenario. We'll see if anything gets any modifications happen after Wednesday once the Fed comes out and cuts rates and says what they're going to say. We'll see if anything is different than what we're seeing right now. So there's going to be a rate cut in October, and now the market's looking forward to another rate cut in December. The dollar was down, interest rates were down 3.98% with the 10-year yield, and we're improving a bit here as far as sentiment. We're still negative with the number overall, 39, but we are rising. We were at 37, now we're up to 39. So we're seeing an improvement there. And as far we're not trending in the short term. We're still below 20 with the ADX. We're still seeing a weakening trend. It's trying to turn up, but it hasn't crossed above the moving average yet. But it is positive with the green line above the red line. And with the update, the bias is positive and the momentum continues to be positive. This internal weakness in the S&P is a little bit of a concern right now, though. So we did get some economic reports that are more independent of the government shutdown. Consumer confidence came in at 94.6. They expected it to be 94.2. So a little bit better than they had anticipated there, but it was down from the last reading at 95.6. And then if you go back a year ago, it was at 109.6. FHFA Housing Price Index up 0.4% month over month. That's stronger than the 0.1% they had expected, and the last time it came in unchanged. The S&P Case-Shiller Home Price Index up 1.6% on a year-over-year basis. That's less than the 1.9% that was expected, and the last reading annualized out at 1.8%. So here are some charts. I haven't been able to show a lot of these lately. Here's the FHFA House Price Index, where we had been seeing a decline here, and now it's starting to go back up again. And then the Case-Shiller composite is still continuing to decline here. And then consumer confidence, where we have the blue line, that's the total number that we see right now, coming down just a little bit here And then the purple line, this is how people are feeling right now. And then what about looking out into the future? That's the yellow line. So we're seeing a bit of a dip down here. There's a lot of crazy stuff going on, and people are worried about their jobs. They're worried about, okay, are we going to be able to pay our bills? Are things going to actually stay under control? We're coming into the holiday season. How's all that going to play out? So there's a lot to be concerned about these days. All right, then we get the weekly look at the overbought, oversold composite. We did drop down a little bit, but we're coming in at 89.97. Longer term, that's still showing, it could show good momentum, but also when we're up into this high red area here, it also means that we are overbought, but we've been up here now for a while. Then looking at, you go back to 1950 and looking at what is the average year. Well, we're just coming out of what could have been a bottom, which we never really set. And then we typically see positive price action from here going out into the end of the year. Now, again, you've got people that just assumed we were going to go down in the summer because all the seasonality charts suggested that. We watched for it and it didn't happen. And now everybody's pretty much assuming that we're going to go up from now until the end of the year. So just because everybody thinks that, a lot of times the opposite can end up happening. But just something to keep in the back of your mind. But typically now we're coming into one of the strongest parts of the whole year as we finish out November and then into December. That tends to be quite positive for the market. Okay, median global real total return, real again means we include inflation in the mix, in US dollars by asset class, just showing the different things here. We still have stocks in the lead, and then the 60-40 portfolio, that means 60% stocks, 40% bonds. Then if you're just in bonds, which are having a good year this year, but they were not doing so well over the last couple of years, stocks were the place to be. And then just short-term bills here. Gold, which is really coming on strong now, but if you look at it in a bigger picture, it's still been underperforming. And then just having cash, that would be the gray line in here. So in the longer term, when you take inflation into account, according to this chart, you still have stocks that perform the best. All right, then allocations in gold, and gold's been getting hit. It was just going up ferociously there for a while and hit some overhead resistance, and then it could be pulling back. And there's folks that think, well, maybe we're going to consolidate again for a while now, just kind of chop along sideways. Other folks, they think we're really going down. The perma bears who always love gold, it seems, they're just, oh, this is the time to buy because we're just getting set to break higher after this. But we're seeing some money coming out of gold right now as less people are being allocated in that. And then exposure to equities also coming down a bit. And again, both for gold and here for stocks, the fact that money's actually coming down when we're going up, that could end up working to the market's favor. It's like a lot of people got out thinking, okay, we're done with this little cycle that we've been going through. And then if we keep going up, they're more likely to jump back in. And then the sector contribution to the S&P earnings growth. And again, most of it comes from tech. This is the big growth area. Then the second one are financials, and we're still seeing a major underperformance of the financial sector to the S&P. It just becomes more and more pronounced every day, and it's even going down now. And then utilities are in a distant third place, but it's really a lot of this coming here from tech. That's why we focus more on that, and that is a real big growth area. Then allocations from global investors are nearing highs from the 1990s. Just folks from around the world, US and Canada, Europe, Japan, Scandinavia, Australasia, and just folks that are participating here in different allocations. All right, and then this is what we see. We know this. We've known this for a while. It still hasn't really changed. Where when you use the 10 to 15 to 20 scale for the PE ratio, we're above 20. We're coming in at 23. And then we have tech, discretionary, and industrials are actually even more expensive than that. We still have staples and communication, which are above 20. Then we start dropping down below 20, where we finish out with energy at the bottom. This chart really hasn't changed all that much. We see it at least once a week, if not more. We have other charts that we look at that just tell us, yeah, the market's overvalued. And so it doesn't seem to matter until it does. All right. So again, we're seeing not really much intraday action here. And that kind of similar where we ended up just coming up to R2 here right at the open, a little bit below that. Then we came down to the unchanged level, came back up to R1, came down to the unchanged level. This acted as support for two times now. And instead of breaking below it and going down, we did see some buying coming in, which took us back above the R2 level. But then each one of these bars is 10 minutes. So the last 30 minutes of the day, we did see some selling here, but we ended up closing above R1. Intraday, not much of a change in the overnight session, at least initially. And it may be quiet. Of course, I've said that before, and then it ends up going crazy here. You've got a lot of people that are really anticipating Wednesday because of the Fed. And so that might slow things down, but other times it's like the market doesn't seem to really care. And it's still looking okay here. The red line really came down because value ended up being down on the day where growth was up. So we are seeing the blue line above the red line, and we are seeing a general improvement after breaking out of this range that we had been in for most of October. And then even in the bigger picture, if you go back to the beginning of August, we're still seeing a gradual uptrend here. So that is positive. And we are improving since growth was up on Tuesday. And this is actually breaking out of this range that we've been in now for some time. So that's also improving there. So growth was up where value ended up being down for the large caps. It was down more for the mid caps and about equal, down a little bit more with the small caps. But we're still seeing a fairly healthy small cap growth to value ratio here, continuing to break out on the end of day chart. And still looking pretty good here with the mid-cap growth to value ratio end of day chart. But this is where we're not seeing all that much. We're still below the 50-day moving average with the S&P growth to value ratio. But when we look at this growth to value ratio, we're breaking out to new highs here well above the rainbow, but not seeing much of an improvement with discretionary to staples, just kind of hanging out around the 50-day moving average. We're still below 20, but we're trying to turn up here with the short-term ADX, but we have not crossed back above the moving average, and we continue to be below 20, but we are positive with the green line above the red line. And a similar story here. We're just barely above 20 with the intermediate term, trying to flatten out and possibly get back above the moving average, but we are positive with the green line above the red line. And we did pick up to above average with volume here now for the last couple of trading sessions. And seeing kind of an overhead resistance level here at 6,900. We got a little bit above that in Tuesday's session, and we're not seeing this blue up and down. This is a gamma exposure here right at 6,900. It's not quite touching the blue line, but that could be acting as overhead resistance. And everything is green here, so we're looking pretty positive from this perspective. And we ticked up a little bit with the VIX on a closing basis with the line chart as well as the bar chart. And we're not really sticking much here to seasonality, where typically now, as we finish out the rest of the year, we stocks will generally go up from a seasonal perspective, which means the VIX goes down. And we did pick up a little bit with the volatility here. The VIX of the VIX, we're coming back up into the moving averages with the bar chart as well as the line chart. So a little bit of a tick up, not very much, after we had been declining with this fear gauge, and we did tick up with this other fear gauge. So a little bit of fear coming back in, and just barely a tick up here with the daily equity put call chart, but we're still going down with the 5-day chart and the 10-day chart. And we're continuing to go up because the risk on stocks, they had a better day on Tuesday. So we're looking pretty solid here with our risk on to risk off ratio, as well as the high beta to low beta ratio. And we're still going down, which is positive with the value to tech ratio. And we're continuing to drop below the band here with volatility risk premium. So saw a little bit of a tick up. That late day selling caused a little bit of unsettledness here. Not getting picked up so much with this chart, but some of the other fear gauges that we look at did show some of that. We did come down based on price, but we saw less of a decline here based on volume after setting an all-time high in Monday's session. And we did decline a little bit, but we're still above zero with the advanced decline ratio chart. And we're coming back down with the advanced decline oscillator. This was starting to show some real strength here. It's a little bit discouraging to see this fall back now. And as we're seeing some weakness in the rest of the S&P 500. And a little bit of a rollover here with our 5-day chart. And we're starting to flatten out with the 10-day chart. We did see pretty healthy new highs, but we saw a bit of an expansion of the new lows. And we're still looking positive here with accumulation distribution. That is above the moving average, the red line. We rolled over a little bit with the boom indicator. We're a little bit concerned because we're above this red line, but are still above the moving average. So this is still positive. But now we're back to turning negative with the Chaikin money flow. We're dropping off with the histogram and the red line's now going down, but we're still going up with the Chaikin oscillator. So now we were getting all three looking positive after Monday. After Tuesday, now we're getting a mixed picture with our smart money indicators. Still looking positive here with the vortex. The green line is above the red line. And saw again the S&P did okay, even though it declined with the advanced decline line based on price. We're still above the moving average, but we're seeing that more across the market here with the NYSE common stock, mid caps, and we're actually dropping below the moving average again with the small caps. And we dropped just a little bit below zero here with those stocks in the S&P above their 20 period moving averages. We were starting to see some strength here, but we're not getting any follow through, at least to this point. And we're falling below 50 with those stocks above their 50-day moving average. We declined with those stocks above their 100 as well as 200 moving averages there. And in the short term, we're not quite up to this pivot point. This could act as overhead resistance where we're at right now. And on the bottom, we were above average with volume. But we did decline with the 20, 50, and 200-day moving average, exponential moving average on the S&P. But and then in the short term, we're still looking okay here with the StochRSI showing good short-term positive momentum and conviction. We came down a little bit, but the wins percent are still looking pretty solid, as is the CCI 14 and 20. And rolling over a little bit with the short-term stochastic, still going up with the intermediate short-term and the long short-term stochastic. And coming down after hitting this Keltner band with the force index, it did pull back just a little bit here, but it's still positive overall. Still looking pretty good here with the bow tie. The longer we stay above these lines, the more they will continue to go up and eventually smooth out if we see more of a sustained upward move. And the short-term trend still looking pretty good here above the blue line and green line, and the lines are going up. And we're still in the +3 channel with the standard deviations chart. We declined a little bit with the balance of power, but we're still positive since we're above zero here. Still looking extreme with the CMB composite. The go, no go is positive. Still up at the highest high value here. And we're on day 125 of the Landry Light trend, positive trend there. And then after stuttering a little bit here with the proper order, we're now starting to go back up with the uptrend here. And we're seeing still a little bit of an improvement with the TTM squeeze, darker blue, and it's starting to advance. And we're above the moving average with our standard deviation since we've been really moving rather quickly here with the price of the S&P. We're still below zero though with the ease of movement. Still looking positive with the Arun, and we're dropping below zero now with the S&P McClellan Oscillator which is kind of a surprise. Here we are setting an all-time high, and this is showing some weakness, bit of a negative divergence there. So we're starting to roll over. It's really hard to see with the summation index based on price. We're still going up though based on volume. So that's giving us a little mixed picture there. We did decline, but we're still above zero with the NYSE McClellan Oscillator. So we're going up with the summation index based on price and volume for the NYSE summation index. And we saw this even after Monday. We're still continuing to decline with the Swindler Trading Oscillator based on price and volume. But momentum is improving. We switched over to positive with the PMO. We're above the moving average based on price and volume. But we did decline, and we're slightly below 50 with the PMOs that are rising. So there's some internal weakness coming into the S&P itself. And we were going up with the buy signals. Now we're ever so slightly starting to go down. And after coming back up slowly, we're starting to level off with the PMOs that are above zero. But we're positive with the Elders Impulse System and the Parabolic SAR. We are positive with the short-term slope oscillator, more short to intermediate term positive with the MACD. And so we are improving in the short and intermediate term. We're not quite turning positive yet with the long term. The tricks in KST, they're trying to turn up, but they haven't quite crossed above their moving averages yet. And we are positive with the Copic curve. We're still getting an extreme reading. We got it flat from Monday to Tuesday with the Sean trend meter. And we're still above 50 with the money flow and ultimate oscillator. We're positive with the on balance volume. We came down a little bit, but we're still extreme with the percent B indicator. We're still outside of the upper Bollinger band. And the short-term RSI is still in extreme positive territory. We're still positive here, but not extreme with the intermediate term RSI. And we declined a little bit with the bullish percent index, but we're still above the moving average. But we continue to go up a little bit. Actually, it declined, but it's really hard to see here with the NYSE bullish percent index. But we are going up with the NASDAQ 100 bullish percent index. Intermediate term trend above the blue line and red line, and both lines are going up. That's still looking pretty solid above all the moving averages here. But we are far away from the 20 period and 50 period moving averages. It came down a little bit, but we're getting 167 here. It's extreme when we get above 100, and then the middle area, that's when we get above 200, and we're coming in at 279 currently. And we're more than 10% away. We're getting up to 13% above the 200-day simple moving average. That's when we start to get a little bit concerned that maybe we're getting a little bit too far away. And then we have a Pring bottom fisher buy signal, which is still generating here. We haven't quite come down enough to hit this red dashed line for the mass index to generate a signal. That would suggest a reversal. And we've been going up, so the reversal would be to the downside. And I'm not really showing any support or resistance right now because we're in uncharted territory. We continue to be there. And from a trend perspective, though, the Heiken Ashi is still positive, as is the Kegi chart, Renko chart, and three-line break chart. And we did go up enough here to put in a new X. So the point and figure chart is still looking more positive. And then long term, we did see a decline with the 150 and 200 moving average steady, but it's not falling apart, but it's not showing a lot of longer term strength that we had been seeing before. But we're positive on all the time frames across all the different indexes. We're still positive with the dollar in the short and intermediate term. And we had tech that led the way. That was the strongest area, and that's why growth was up. Materials, which got hit in Monday's session, they were up a little bit here, and then discretionary barely positive, but virtually unchanged, with all of the other sectors ended up being negative with the real estate down the most. And everything positive here, a lot of this, except for the S&P getting above 6,900, a lot of this happened right after the open, was setting a new all-time high. The NASDAQ, which also would include the NASDAQ 100, they both set all-time highs as well as the Dow. And then some red here with Google, but you see NVIDIA was up almost 5%, and that really helped the market there. But a lot of these more defensive areas, an awful lot of red down in here. Healthcare, industrial, staples, utilities, real estate, energy, materials, and even financials are seeing some red in there. But we did set another high with the Dow, even though we closed pretty much at the low for the day. But we are positive with the Elder's Impulse system, and we're not able to get above this pivot point here. This is overhead resistance with the NASDAQ. But we're positive with the Elder's Impulse system, and we're actually a little bit above this pivot point with the NASDAQ 100. We're positive with the Elder's Impulse system. Momentum is switching back over to positive, seeing a little bit more conviction there. And we were down over 0.5% with the S&P 600 small caps, and we were down a little bit over 0.5% with the Russell 2000 small caps after having a pretty good day on Monday. But they're still positive with the Elder's Impulse system for the small caps. Mid caps also declined 0.86%, just coming back down into the range that they've been in and going from positive to neutral with the Elder's Impulse system. The Wilshire, it barely was up, so yeah, that's another new all-time high. We were also up with the total US stock ETF. That's another new all-time high there. Financial sector was down. We're still having a difficult time getting above the 50-day moving average. And we're continuing to see this real drop off with how the financial sector is underperforming the S&P 500. And the FANG index, it was up, set another new all-time high there. And so Amazon was up 1% above its 50-day moving average. Apple was virtually unchanged, but it had a good day on Monday, so it's still looking pretty solid. Microsoft was up almost 2%, even though it closed well off of its high. It gapped up and then closed pretty much down at its low. And Google was down almost 2/3%, but still coming off of setting an all-time high. Meta still trying to get back above its 50-day moving average, where NVIDIA was up almost 5%, setting a new all-time high there. And Tesla was up 1.8%, coming up into the high end of the range that it's been in now for quite some time, where we are setting a new all-time high with the Dow Jones Semiconductor Index as well as the SMH Semiconductor ETF. And we're coming up well out of the rainbow here with that same semiconductor ETF. We're continuing to decline with the staples to tech ratio. That is positive. And we're coming down as gold has still been under pressure lately and the S&P's been going up. That's making this ratio coming down. And a little bit of a drop off here with US to world stocks in the short term, but the longer term correlation is still pretty strong. We did decline with oil. We're getting back down to the 60 range now, where the dollar continues to be in a downtrend, but it's just kind of bouncing around. It's not really showing a lot of conviction over the last few months. And we are under 4% with the 10-year yield, and the market will tend to like that. Now, what happened was that when the Fed cut rates last time, that was a bottom for the 10-year yield, and then rates started to go up. If they cut rates on Wednesday, which they're going to do, is that going to start the 10-year yield going back up again? We saw that a year ago, and then we saw that a few months ago. So we'll have to see if something like that ends up playing out this time. And we're continuing to go up here with the 10-year based on price. Now, this growth to value ratio is looking good. The Q's to S&P, that's looking really solid. Discretionary to S&P, that's not looking so good right now, but we are looking pretty solid when we compare large cap growth to value. So we're really improving with the large caps, mid caps, and even the small caps are improving. And we're still going down with the staples to S&P ratio, which is positive for the market. Now, we still have some time left. It'll be next week when we need to have the Hindenburg omen actually confirmed. That'll be November 7th. So we'll see if that ends up happening. As of right now, we do not have a confirmation spike. The Swag NYC breadth thrust that we had been is now falling off. We didn't have a confirmation within the window that was needed. So what's our outlook then? We do have a number of companies that will be reporting after the close. That'll be Google, also Meta will be reporting, and then throughout the week we have Amazon, Apple, Microsoft. These are the big companies, and they're all going to be coming out with earnings here. We're positive in the short, intermediate, and long term when you take everything together. And we're supposed to get the MBA Mortgage Applications Index. Now, we have been getting that, but we get it every week, and it's not a market mover. It's more for information there. The Advanced International Trade in Goods, as well as wholesale and retail inventories, pending home sales. But then the big thing is going to be at 2 p.m. Eastern when the Fed comes out and makes their announcement, because the government shutdown still continues here. And then we do have a lot of geopolitical things going on, but it's mostly focused on what's happening in Asia now with different trade deals that are happening in Asia, and then President Trump and Xi, who are supposed to be meeting. So we'll have to see how all of that works out there. And this is what the calendar is supposed to be giving us. We'll see just how many of these reports end up coming out. Kind of the same thing here with this other economic calendar. But seasonally, kind of across the board here, we're neutral to negative with the Dow, where we're flat out negative for October 29th for the S&P. NASDAQ is neutral to positive, so not any real tilt one way or the other there. And we do see a little bit of a tick down here before we see a few days of positive seasonality as we finish out the month of October. And this is the tendency to see positive seasonality from now going into the rest of the year when you look at post-election years. And then I also included the first half of November here because we're dealing with the second half of October, which tends to underperform the first half of October. But now we're starting to keep an eye on the first part of November, which is a good performing time when you break it down into 2-week periods. And we are continuing to drop off here with the stocks that are in blackout periods because they're reporting earnings, blacked out from being able to say, hey, we're going to buy back some of our own stock. And then looking out to November, we do see positive seasonality when you break it down in the different ways to look at it. So we still have the ease of movement, which just can't seem to get back above zero. And we do have the McClellan Oscillator and Summation Index for the S&P. It's dropped below zero there, but it's still going up based on price, but we are declining based on volume. No, we're declining based on price. We're still going up based on volume. And the Swollen Trading Oscillator is still going down. And we have this unconfirmed Hindenburg Ulman. That'll be until November 7th. But then our smart money indicators, we're getting a mixed picture. We're still positive with accumulation distribution and the Chaikin oscillator, where now we've switched over to negative with the Chaikin money flow. And we're still positive with the McClellan oscillator and summation index for the NYSE, even though it did decline, it's still above zero. The parabolic SCR is positive, as are the momentum oscillators, and they're still continuing to improve. And then we are positive longer term with the growth of value and discretionary to staples, but we cannot seem to get back above the 50-day moving average in that ratio for the S&P. And the bullish percent indexes are still positive, as is the money flow, ultimate oscillator, and vortex. And the financial sector, it's still in an uptrend by itself, but it just seems like it just never ends here. The underperforming of the financial sector, the S&P. And then the momentum for the NASDAQ 100 as well, and the long-term special K chart is still positive. And here are the pivot points for Wednesday's session. So our conclusion, really haven't changed anything overall here. We're positive in the short and intermediate term because we're above the 20 and 50 period moving averages. Positive in the long term, but we're getting kind of far away from the 200-day simple moving average. So we're just keeping an eye on that. Thank you. I hope you have a wonderful day, and I will talk to you in the next video.